All right, it's 10 a.m. here in New York, so we'll get started here. Thank you all for being here today. We'll get this event started. We have an excited lineup of speakers today to talk about overcoming bias, both in terms of hiring and supporting racially diverse talent, and also in underwriting. Great. So today's event actually has two co-hosts. It's hosted by Insurtech NY and also NAYA New York, which stands for National African American Insurance Association, New York chapter. Insurtech NY is a community-based organization that supports the insurance to accelerate their digital innovation in the New York metro area. And NAYA New York connects the insurance industry to a talent pipeline of diverse and business-centric individuals. Today's event has been supported by four great organizations: Lock & Lord, New York Economic Development or Corporation, Cover Genius, and RIMS New York chapter. Thank you all for supporting our event and our organization. Just a few announcements before we get to the actual speaking content. We have some exciting events coming up. First is that, I don't know if you knew this, but this event is actually part of a Northeast Insurtech Week hosted by multiple Insurtech community organizers in the Northeast region. And we just had great two events last 2 days, and this is our third event. And there are actually three more events coming up. So the next event actually is today at 1 p.m., hosted by TrustLayer and Insurtech NY on new workplace balancing risk and Insurtech solutions. This is a bonus for all of you who are here today. You just have to come back on the same URL at 1 p.m. and you can actually attend the entire 1 p.m. sessions. So hopefully you can come back. And then we also have an event coming up tomorrow at 10 a.m. again, Harnessing Innovation Ecosystems by Innovation Underwriters. They are actually community-based out of Boston. And then we have on Friday, to wrap it all up, the great week that we're having, Founders Journeys by Quesnay, where we'll have showcase and have discussion amongst great female Insurtech founders. We also want to make you aware of our next Insurtech NY event in August, which is on core system evolution. It'll be a great event. We got exciting lineup of awesome insurance and Insurtech leaders speaking in that event. Just one big announcement we want to make before we get to the content is that we're announcing Insurtech New York Growth Stage Accelerator. It's a really exciting program that we're launching, and I just wanted to kind of make you aware of it. So we're actually looking to get great Insurtechs to join us. And so if you're an Insurtech founder or you know Insurtech founders that fit this criteria, please let them know. If they have revenue, they have some customers, meaning they have product market fit, they're truly trying to scale, and their funding stage, if they're funded, is at the C to Series A range, then you're a great fit likely to participate in our program. And more specifically, looking for digital MGAs, marketplaces, distribution, or underwriting technology, customer engagement, or new data sources. And why should they join? You should join because you'll be able to partner with 15+ carriers and brokers who have committed to work with us through this program, and they're specifically looking to work with Insurtechs in these areas. You'll also be able to meet many Insurtech investors who can help you raise your next round, and be able to find employees and advisors through matchmaking events. And finally, a couple things. This is a 100% virtual event. You can attend it from anywhere in the world. And the program is only 12 days across 6 weeks. And finally, there's no cost involved. So it's really a kind of hopefully a no-brainer option for you if you're eligible. Some key dates, I won't go through all the dates, but our application will officially open next week. But just for those of you who just attended this event, it's actually open right now. So you could actually start applying early. And we'll have the application open for the next month, and there's a few dates that you can see on the right-hand side, also on the website. You can see more information on our website, but the actual accelerator program will start October 8th and November 12th. Go to our website, insurtechny.com/accelerator. Great. So one thing we wanted to just check with you guys is potentially a question that we all have, right? Which is, do we actually have a bias problem in insurance? And more specifically, bias against Black people. We believe that was the case, but we wanted to actually verify this through numbers. So we did that. So we looked at the Census Bureau data for 2019, and US population among the 350 million, 13% were Black. And so we looked at, okay, so how many of them are actually employed and how many of those employed are Black? And actually 12% of them were Black. So that's roughly in line with the population. And then we also looked at those who are in insurance-specific jobs. And when you look them up, 13% were actually Black. So when you just look at these numbers, it seems like they're in line and right proportion. So you might say, hey, there's no problem in insurance. But sometimes looking at summary level data could be deceiving. And so we actually had to probably need to look a little deeper. So we did that. We looked at the 13% who are Black in insurance. And what we found is the following. For claims and policy processing clerks, we actually have probably more proportional Black than what's expected at 22%. But on sales and underwriter side, it's significantly less. The sales is 10% and underwriter is actually only 6%. So you can see that there's definitely imbalance in terms of distribution of Black people across different functions. And it probably goes without saying that it's important to have balance across all the functions. Claims is important, but sales and underwriting is actually equally important. In some cases, more important because of the different functional roles they have. But this is actually just the tip of the iceberg. Probably the most important thing is the executives who actually hold the real power, right, in terms of hiring and promoting and actually making the insurance move forward. And so we looked at the executive mix. And so we did this through looking at the executives who worked at top 10 P&C carriers by premium in the US, and then also top 10 life annuities carriers. And then we also looked at top 10 most funded insurtechs. And the numbers you see are, what you see here is 4% for P&C carriers, 2% life annuities, which I guess in some respects I expected, but one thing that also surprised me is actually among the insurtechs who are a new industry in some sense, and they are just as not racially diverse as the 2% and P&C carriers and the life annuities. So the question, is there a bias problem in insurance? Hopefully, based on that data, you agree that we actually do have a problem. But there's good news. Good news is that there are actually a lot of Black people in insurance, as you saw. There's 30% of the insurance employees are Black, which actually is great. I don't think that's the case in many other industries, right? And so we are attracting them. There's great number of talent there. You actually hear from the Insurtech founders who's going to be speaking a little bit. They're awesome founders, award-winning, great Black leaders who have founded Insurtechs. They're there. There's interest is there, and they're already in the industry. And solution is in your hands. We have executives from insurance carriers and brokers, Insurtech founders, investors who can support the Insurtechs. All of you have power and ability to support them, hire them, mentor them, and also just be educated about what's going on, and we'll hear from the founders about some of the obstacles they went through. Hopefully, it will be a bit of eye-opening, information they will be able to gather. So, hopefully you'll be able to kind of get out of this event in an hour and a half. It's only very short time for us to get to know everything that Black people are going through and some of the solutions, but hopefully it'll open your eyes up to actually make some difference. So with that, I would like to introduce Lindsey Green. Lindsey Green is a chief strategy officer of New York City Economic Development Corporation. Prior to her role at EDC, she also worked at New York City Mayor's office, Goldman Sachs, and several food startups. and she holds a BA in economics from Harvard MBA and MBA from Yale. I'm really excited to have her speak for us and just start this event off. So with that, Lindsey, are you there?
I am, Tony. Thank you. Thank you so much for that introduction, and thank you to everyone who's joined us today. I'm excited to be here to kick off an important discussion. You know, this forum, this event is happening at a really significant time. You know, for the first time in a long while, I dare not say ever, we're really starting to have meaningful conversations around the issues of systemic racism and injustice, and how we tackle those sort of at every level, be that in, you know, national government, local government, consumer behavior, sort of day-to-day interactions. And I think it's really important that we are actually having the opportunity to do that now in a way that we haven't in quite some time. You know, it's a situation I think many of us are seeing in our companies where, you know, employees are you know, demanding that their companies do better and promote policies and practices that integrate equity and diversity across their organization. You know, voters are looking for this from their political leaders and their community leaders to do everything from reform the police to do different and better community investing, all of which is about promoting equity and equality. And I think it's a real opportunity for us to actually enact meaningful change if we just have to really seize the momentum and take it into action. And so that's, you know, conversations like this are the first step, because you have to be intentional about defining the problems to be able to actually figure out how to address them, and not that any one thing is going to undo, you know, centuries of racism and decades of racist policies that are built in, but you have to start someplace. So this is an important first step. So bringing it back to what we do at EDC, our work has generally always been about trying to make strategic investments in communities that get them are reflective of the diversity of the city, no matter what people's, you know, initial set of opportunities have been. And so I really see in our work how important it is to make sure that there's, you know, tools and resources available to people to help build a stronger future for themselves and for the city. And, you know, a key piece of that is tends to be capital, and in a lot of ways, insurance is a piece of that. You know, when you talk about, you know, a major place where biases that deny people access to resources like housing or mortgages or something like that, we really had a thing to do, but because, you know,
Okay, so sometimes we have internet issues. So hopefully you're able to catch most of what Lindsey has shared, and you know, the fact that there's definitely a lot of work to do here. So let's get right into kind of the next step. And thank you, Lindsey, for coming here. She was kind enough to kind of share a little bit of her time today. So today's agenda is the following. We just did our introduction.
Sorry, Tony. I came back. I'm sorry. I don't know what's happening with my tech today. I apologize.
No worries. Okay, if you want to just quickly finish off, I think that works.
Yeah, well. I'll try to wrap up really quickly. I think there's a couple of things that I just wanted to really highlight. In that, I think when you're talking about technology and the role that bias can play in technology, I think we see really two opportunities. I'll use artificial intelligence and data as an example because it sort of touches a bunch of different types of play. But first, you can use technology to identify and help reduce the impact of bias, and second, you can use the nature of some of the technology with something like AI itself to help develop and deploy, make sure it's developed and deployed in a way that is sort of mindful of bias, right? Like I think the whole point with lots of pieces of technology is that you still need human judgment to help overcome biases that are aware, and you need to recognize that the humans play a role because we all bring our own biases, regardless of what happens. And so I think the whole point is that technology can bring tremendous opportunity to the table to help us tackle some of these systemic problems, as long as we're aware of our own baggage and any of the idiosyncrasies that come with the technology we're developing, so that we intentionally try to work through that as we're deploying it and rolling out new innovations. And that's really what we're focused on doing at EDC. And I gather that's a lot of what the community gathered here today is really trying to do. So I just want to underscore how important that is, and how much that's ingrained in the work, in the type of programs we do at EDC. And so I want to thank you all for the work that you're doing, and I look forward to hearing more and hope we can work together.
Great. Thank you so much, Lindsey. I appreciate the words of wisdom there.
Sorry about the tech.
No worries. It happens. Okay, so today's agenda, we're gonna, after this, get straight into showcasing some of these great Black founded Insurtechs. And then we'll get to actually talk and ask them questions about some of the things that they had to do to overcome to build their business. And then right after that, 11 a.m., we'll have some discussions with great panelists talking about removing race from underwriting, and then we'll finish it off. So with that, I want to introduce our first startup showcase, WeatherCheck. And we'll formally introduce the founders after we do the showcase, but for now, we'll start with the showcases. And so WeatherCheck, Demetrius Gray, when you're ready, please go ahead.
Awesome. Let's see here how this goes. All right. Looks like I have made the transition smoothly. Well, first of all, thanks to everybody for being on this morning. I'm super pumped to talk about what I get to do every day. So at the end of the day, WeatherCheck is a 21st century severe weather monitoring solution. At its core, WeatherCheck sort of answers this sort of central question around like what's going on with the building that I'm in. For most of us, that's normally our house. Now, normally when I did this the last time for Insurtech New York, we were all sort of able to go out in the world, but I'm sure we're all sitting at home right now. And so we kind of have a general sense, but normally we don't. We spend most of our time elsewhere in the world, and we have sort of questions around, okay, well, what action should I be taking up against a severe weather event that might be impacting my structure? And that's across every single category of severe weather event. Mother Nature certainly knows how to send a blow our way, and we're experiencing that in the viral sense now. But more importantly, we sort of rely on our agent and broker to sort of de-risk some of that conversation for us and give us some perspective around, hey, like, am I buying the right thing? Am I insuring the right thing? What are the risk factors associated with me? And more importantly, when it's time for me to take a specific action, should I do that? Can you advise me appropriately? What we found, unfortunately, was that agents and brokers throughout the country, and a lot of times even insurers, really don't have enough active insight into what's going on a premise specific level with individual policyholders. And so the value that they can add in the highest moment of distress for a lot of insured is very, very limited. And so principally that's why we created WeatherCheck. When we created it, we didn't know that it would be the first place online that you could search a house for a severe weather incident history. And so that sort of gained us the colloquial phrase of being the Carfax for severe weather damage in the industry. You can search any address in the continental United States, and really quickly in a few seconds, we'll pull up everything associated, and then sign that property up for pre and post event alerts so that the insured knows exactly when to take specific actions around the asset. Now, a lot of times the scenario that we kept hearing was that I called my agent is just sort of making a gamble of it as to whether or not I should file a claim. Now they have a full event history, and ultimately what that's doing is protecting their overall contingency bonus in the long run, telling them exactly what that date of loss is, and then adding real value. In some cases, even helping to close deals that the agent otherwise wouldn't have gotten because they're dealing with up against a bigger broker or whatever that might be. And then insurers who are maintaining a higher degree of touch as a result. And so, like I said, that single address search is the only place online that you can look to see whether or not your house has been impacted, and then those sort of active notifications. So as an example, the Nashville tornado scenario, we were ahead of the National Weather Service in sending our users notifications. For us, we rely on numbers. At our core, it's about making sure that we have a good assessment of damage probability, not just atmospherics. And then overall likelihood of a specific carrier to pay. So yes, we can tell you whether or not your insurance company will pay over another. So don't get too nervous out there. But so we actually help you to sort of determine what that inspection viability is. And so we've partnered with companies like DroneBase to sort of help in rural areas where we know that there's less coverage and less data. Ultimately, we know all this because we're actively filing claims against properties for legitimate losses, helping insureds through that process. And at the end of the day, insurance companies are paying them. We found that it was easier to sort of finance and grow the business on the back of existing claims. How we do it is simple: a lot of data being combined all at once. The stuff that you already know, some boutique sources and enriched sources, all going into proprietary algorithms that then sort of ultimately result in real actions that the user can take. Unlike companies out there that you may have dealings with, we're really focused on how does the consumer or the policyholder what do they do with the data as a result? And that makes us different. So ultimately, we're helping people prepare before the storm, take pre-event actions, mitigation measures, and then post-event actions to move forward quickly and efficiently after disaster. And it looks like my computer's going slow. And then at the end of the day, speed up claims. We want things to close faster than they've ever closed before, so that we can get on with life. A lot of carriers and insurers and brokers using us today. This pales in comparison. We've been incredibly fortunate to have really great partners like Rockford Mutual and MetLife and Higginbotham and Gallagher and others throughout the country who are actively sort of moving forward with us. Our pricing model is pretty simple, actually sort of complicated, but at the end of the day, most of our carriers use our APIs to sort of drive their business in claims underwriting or sales and distribution. But our agents and brokers are really on a per user license fee with their brokers, account managers. And then we charge 10 to 20% to go through a fully managed claim with an insured. And so a little bit more complicated there, but super, super simple and easy for us. Myself and Jermaine started the company. Jermaine hails from Yum Brands, KFC, Taco Bell, Pizza Hut, where he ran strategic operations for their C-suite and special projects. And so we're a team of about 11 folks in Louisville, Kentucky, that are just trying to build a better world in insurance, and super thrilled to be able to have a conversation with you guys today on what we've experienced so far. All right, thanks guys.
Awesome. Thank you so much, Demetrius. Okay, next is Infinico. Jamie, you wanna start sharing? And unmute yourself.
I am unmuted. Can you hear me?
Yes.
Okay. All right, so before I get going, I just want to say thank you to your community that you've put together here, Tony, with David and the rest of your team. The research that you did and the problems that you stated, when you have connections like what we're doing now, meetings like what we're doing now, I think that's a great start. So I just wanted to say thank you again. And now I'll tell you a little bit about Infinico. So my name is Jamie Kinney. I'm co-founder and chief product officer. Infinico is an entity that cares about individuals. We care about your ability to keep your family paid and have financial assets. We care about the threats to your life. And so we put together a set of immersive training solutions that allows people to activate that decision intelligence in a crisis situation. So I'll tell you a little bit more about us. I would say we're probably the youngest company here. We started in December of 2017, and we took a year and a half to meet with professionals in various industries, and we went through some ideation and prototyping. And we're 1 year into traction at this point. And our goal is to polish off your intuitive ability to keep yourself safe. And we use a plethora of technologies that allow us to have a very strong Insurtech play, as you see at the bottom of this slide here, as well as in medtech and some other industries. And this is our team. So it consists of the three of us. We're looking to grow this circle within the next 6 months. So to the left is my co-founder and CEO, Ramki Dirisetti. And to the right is our partner and our Chief Revenue Officer, Valerie Gigantis. And I'm really proud to say that as of last month, we won our first award. This was for our cyber simulation. And this was very special to us because this was the industry signing off on the effectiveness and the product market fit of our solution. So just wanted to take a quick second and show that to you guys. And at the same time, we got a taste for blood. We want to win more awards. And very happy and proud to announce that our very own Valerie has been nominated for the Female Founders in Insurtech 2020. So we're keeping our fingers crossed that we can get shortlisted and have yet another opportunity to compete with our solution. Okay, so let's take it down a level. So what exactly is it that we do? So before we started writing code, we took some time to understand the different cognitive functions of how people learn, basically the neuroscience of learning. We actually spent time with neurosurgeons and neuroscientists, and we even learned a few neuroanatomy terms. Very fun times back then, right? So once we came to the point where we think we understand how to move cognitive functions into an experience, that's when we came up with the term situation room. And the term situation room is very widely used in the intelligence management space. It typically applies to political and military events. But in our case, we decided to build a gaming platform, pull all of those cognitive functions from the left over to the right to start to build that multisensory experience, to help polish off your decision intelligence, maybe lead to muscle memory. And in some cases, it can be a little bit more fun than you realize. So what I want to do is just show you a quick little video. This is a trailer that we have, and I'll just play it. It'll give you a sense of how our application works. But actually what I got to do right now, I'm going to stop share and I'm going to reshare, or else you're not going to be able to hear anything. So give me 1 second. I'll just reshare. Okay, we're back.
Most of our systems are down.
Is there anything we can do to stop the bleeding?
Files corrupted or encrypted. On-site backups too.
We need some help here. Who can we turn to?
We need to talk.
I'll activate the incident response team right now.
Okay, hopefully everyone was able to hear that. So what you saw was a quick mashup of 2D animations, 3D animations, professional voiceovers, logic, opportunities for the audience to be engaging and vote. And our platform comes in 4 different experiences. So I have 3 on the screen. The first one, the most popular one right now, is the live virtual moderation. And at that time in 2018, when we came up with this, I said this in the last competition, we really were accidental early predictors, because now we're in a place where everything has to be virtualized. It's at a frantic pace. So we didn't have to pivot, thank God. We just had to move a little faster. So we have the live virtual moderation, where it's basically what I'm doing now, but you can actually participate. And then there's the automated virtual moderation, in case you weren't able to make it. You can still see a recording of the actual moderator and still participate, answer questions, and be assessed. And then there's self-paced, where there's no moderation, it's just you and the application engaging. And then there's this fourth version. And now for those of you who are brave enough and you want to get into a room again, like what we used to do back in the day, you can experience the 3D Assisted Tabletop. So this is at the last Net Diligence conference in 2019 in Santa Monica. And you can see me in the back of the room standing next to Dave Navetta from Cooley. And so all we're doing here is satisfying the imagination requirement so that Dave can get right to the point with each one of those tables. So one thing I want to say before I get going is Infinico is a multicultural entity. We have folks all over the world that do different things. Some of the people I mentioned are 2D and 3D and voiceover folks. And so, I'm happy to say that, we are diversity by design, because we had an opportunity to reach out to all of these different countries, and we've been reaping the benefits from doing so. So thank you for just sitting with me these last 5 minutes, and I'm looking forward to getting forward with this panel. All right, I'll hand it back over.
Thank you, Jay. All right, next is Pineapple, and Junior, when you're ready, you can start sharing.
Awesome. Great. Can you guys see my screen?
Yes, we can.
Awesome. So first and foremost, I'd like to say good morning to everybody. On my side of the world, it's currently the afternoon. It's 4 p.m. I'm currently broadcasting from Johannesburg, South Africa. I'd just like to say thank you for this opportunity to share what we've been working on, and I hope you guys enjoy it. My name is Nabin Yangulube, and I am one of the co-founders of Pineapple. So at Pineapple, when we first started this journey, we started doing a bit of research in trying to find the main pain points of insurance for the millennial customer. And one thing that we really quickly picked up on was that insurance was seen as a grudge purchase and not a loved purchase. And we started to ask ourselves, why and how did insurance get this reputation? And how can we transition insurance from something that's seen as a grudge purchase towards something that's seen as a loved purchase? And really, the reason why this reputation came about was mainly because of 3 pillars. The first being trust, the second being access, and the third being product fit. In terms of trust, we found that when it came to paying monthly premiums, the consumers had no idea as to what was actually done with the premiums that they pay on a month-to-month basis. From the perspective of a consumer, it's felt as if the premium was being paid into a black box full of complexity, and they never really felt as if they got anything out from those premiums that they were paying on that month-to-month basis. The second was access. In terms of purchasing insurance specifically on an item-by-item basis, there was a really high threshold in terms of what you needed to do in order to access those type of products. And thirdly, when it came to the actual products, we found that there was actually a very low sense of understanding as to how insurance products worked. This was mainly due to the excessive use of jargon and very high level wording that really tended to scare people away and deterred them from crossing over the finish line and actually insuring the items. So we thought to ourselves, if we were to roll out a solution that had to cater for this, how would we go about this? And what would be the 3 main areas that we want to focus on? And once again, we came back to these 3 same pillars of being trust, access, and products. In terms of trust, we wanted to make sure that there was complete transparency as to what was happening to the monthly premiums that you paid on a month-to-month basis. We wanted to give people a real-time breakdown of this. Secondly, in terms of access, we wanted to make this product as accessible as possible. And we found that in terms of the millennial market, a lot of them already had smartphones. So why not roll out an all digital approach to insurance? And finally, when it came to the actual products that people wanted to insure, we found that when it comes to millennials, they tend to have a few high value items that they treasure. So this might be a cell phone, a laptop, and so forth. So ideally, they'd want to be able to insure items on an item-to-item basis, but traditionally, this was very difficult for them to do. So this came to us developing the Pineapple app, and I'm going to give you a quick demonstration as to how this app actually works. So on Pineapple, everything is picture first. So what we do is we require people to take a picture of the item that they want to insure. Once they're happy with the picture, we process that image through artificial intelligence to sort of assess what you took a picture of. Furthermore, we require you to put in a few more additional details to that item, such as the name of the item. And finally, we require you to give it an estimated value in order for us to calculate your premium. While your premium is calculating, we'll give you an opportunity to see what you're covered for and the excess structure for this product. You can proceed to your basket where you can get a summary view of the items that you currently have insured on Pineapple, as well as the new item that you want to insure. And finally, you can check out, and typically under 30 seconds, you are insured using the Pineapple app. So really, we wanted to introduce a really seamless process for insuring items on an item-to-item basis. Currently on Pineapple, we allow people to insure their electronics and belongings. And as of last month, we now allow people to insure their motor vehicles. Now, I'd like to give you a few statistics as to how Pineapple is doing so far. So since we've launched, we've amassed a membership of about 28,000 members on the app. Since we've launched, we've been able to reduce our cost per acquisition to be 6 times less than the industry standard. Our online conversion rate is currently sitting at 8 times the industry standard. We are currently growing our premium at about 20% per month. And another great statistic is that less than 20% of customers who insure using Pineapple need human intervention. This just goes to show how seamless the whole process is when insuring with Pineapple. Furthermore, when it comes to our ranking on the App Store, we're currently ranked the highest P&C app in South Africa. We've amassed a following of about 45,000 people across social media platforms. 1 in 5 of our new users are actually referred to our app through an existing customer. And finally, we have an NPS score of 65, which completely dwarfs the industry average of 33. Just to give you a sense of some of the awards that we've been presented with to this point, we've been fortunate enough to take part in the Hartford Insurtech Hub, powered by Startup Bootcamp. We were one of the first South African insurtech companies to be selected to compete in the Google Launchpad Accelerator. We've been featured in numerous articles across VentureBurn, and we were also we're actually voted the best South African startup. And the other awards that you can see on the screen, such as being voted MTN App of the Year, and so forth. So currently where we are is we're currently based in South Africa, but we're starting to explore a presence in the States. And we're very interested in picking up any conversations and forming any partnerships with anybody who's keen to further the conversation. So once again, thank you very much for the opportunity to present what we're doing, and we're looking forward to continuing the conversation.
Awesome. Thank you so much, Junior. And now, last but not least, Anita will present Univa. Anita, when you're ready, please share your screen, and you can also bring your video up and mute yourself as well.
Awesome. Thank you so much. I'm certainly going to start by unmuting myself. Can you unmute me and get my camera up?
You're unmuted.
I'm unmuted. Where's my video?
You can, yep, you can turn your video on now. Yep.
Yeah, we kind of sort of thought you might like that. There you go here. Awesome. And I'm going to now share my screen and my audio with you. So. Awesome. Is everybody able to see my screen here?
Yes, we can. Yeah.
Hope that's a yes. Awesome. Thank you for allowing me to share today. I'm Anita Darton-Gardine. I'm the CEO and co-founder of Univa. If you see hands appear off to the left, that would be my co-founder. I'm going to share with you what we've been building with the general manager of benefits of Microsoft since 2014. That's when Reverend Jesse Jackson made our introduction to Microsoft in that moment, because he wanted to see more diversity in Silicon Valley. What we've solved for with our technology platform is COVID requires at-home work and in-home care. So we've built an enterprise-grade GDPR compliant technology platform that connects FBI background check caregivers who deliver people care on a 24/7 basis to employees at companies like Microsoft, Dishcraft Robotics, and other institutions. The reason we built this technology platform in 2014, and we built it in collaboration with attorneys at Wilson Sonsini, who've handled all of our IP since that time, is because we know we have 10,000 baby boomers retiring every day. We know that 43% of professional women leave the workforce when they have children, and 40% don't go back. Further, we know that companies are missing about 18% of their productivity from that 40% of employee bodies who provide elder care currently. So what we've done is we've built a complex technology platform in the past 6 years in which we connect businesses through the web app, for example, to send an eligibility file over of which employees get a subsidy, for example, to help pay the care and which ones don't. The same model could apply in a patient environment, but I'm going to continue to talk about care offered as an employer provided benefit. An employer is going to find us here through the web app, but employee customers are going to find us through a native app through their smartphone or through the Oniva 1-800 number called Oniva Me. And caregivers are going to find us here through the Oniva Pro app. Each one is customized for each user group. And when I do a product demo, you'll have an opportunity to see that. Currently available here in 13 counties in the San Francisco Bay Area and available to scale any place domestically in the US and into Europe. Our technology provides the current services that you see from adult care, housekeeping, massage. Errand services are currently booked as adult care. If you need someone to go out and shop for you, pet care is coded into the system and it will be unveiled next. What you would do is you would identify those services that you want to provide, and based on a number of matches, you'd be returned the best set of caregivers who have the skills you need, but we'll also have matched on other attributes because our goal is to create long-term repeat books and very quickly. You'll notice in our platform that you're able to choose a caregiver, whereas in other apps, like say in Uber or Lyft, you get whoever they choose to send you. Because we comply with all laws and regulations, our caregivers set their own rates. We only require they set a living rate floor of $15 an hour. And we ask that they accept tips when they provide exceptional service. And as you can see on the right, if there ever were any issue around dispute of payment, everything's handled within the app. And we do have a concierge available by 800 number who's always there to provide that support. Rather than talk about the product, I wanted to share with you, we have focused on creating COVID enhancements. So if you look at the two screens on the corners, you'll notice the Oniva Me app, which is what the Microsoft employee uses, and the Oniva Pro app, which is what the caregiver uses. You'll notice that at the time a booking is made, both parties are now required to confirm that they'll comply with CDC guidelines. That means that our caregivers show up with masks, feet coverings, etc. 1 hour before the job is booked, the Oniva Pro, the caregiver, receives a notification and they confirm they'll comply with those guidelines. And as you can see from the screen in the center at Oniva, we'll even be able to show you verified COVID test results. So let me share with you what it is.
The Oniva Concierge Care technology platform delivers trusted, personalized in-home care as an employer-provided benefit. Finding trusted caregivers can be a full-time job. The Oniva Me app makes it so finding caregivers only takes minutes. Watch how easy and convenient finding a quality caregiver with a fingerprint-based living FBI background check can be. Today I need to schedule childcare with driving. I need my Oniva Pro to pick up my daughter at 3:30 from school, drive her to our home, help her find a healthy snack, and get her homework started. The Oniva platform has returned 4 independent business operators who will come to my door. Oniva only presents caregivers who meet all applicable local and state requirements and who have a living FBI background check. Meaning, if a violation is found, Oniva is notified and the individual is removed from the platform so they're not in anyone's home. Watch May's video and see for yourself what an outstanding Oniva Pro she is.
Hello, my name is May and I would love to take care of your family as your Oniva caregiver. My services include driving and childcare. I have over 8 years of childcare experience for both agencies and private home. I love working with children and enjoy their playfulness and creativity. I look forward to bringing my care to you and your family as your Oniva Pro.
I can also see May's current Trustline certification, meaning that Oniva has verified that she has passed and maintains a fingerprint-based living FBI background check. May also has first aid and CPR, and I can see her past experience with 2 other families, all of her personal car and insurance information. I choose May. I add in a note about a healthy snack and that I'd like her to start her homework. I click Post Bookings and May will get a push notification about this job. See, there's my request. Oniva offers GDPR level data protection and privacy, so May will only be able to see some of my information, just enough to let her know if she can meet the request. May gets another push notification confirming that she's got the job and now has access to my detailed instructions and locations. Once May is done with this job, all of my private information is withdrawn. In less than 3 minutes, Oniva found me 4 FBI background checked caregivers, their references, current certifications, and availability. I'm done booking care for my daughter today, and I can easily get back to work knowing she will be well taken care of.
Awesome. So just to move quickly, we were awarded our for trust and safety in the in-home care market on December 31st, 2019. It's my first patent. It's about the 10th. You know, certainly the benefits of joining our technology platform is you gain access to that FBI background care. You get the benefit of working with a certified Black supplier, so you can count minority spending if that's a goal you have as a part of your business. And we also offer ongoing webinars, everything from talking COVID, safety and care, to talking to children and employees about race and other matters. So we do know there are other competitors out in the market who deliver care, and we encourage every company to take full advantage of looking across the market to see what's there. To quickly move to how we're different, again, we provide verified results. And one of the other differentiators is we're the only ones who has every caregiver bring a government issued photo ID to verify their identity. As you look at us vis-a-vis other competitors, we focus on safety, trust, and being fast and efficient for the caregiver. I mentioned we're available in 13 Bay Area counties, but we're scaling with some support of these companies that we have agreements with, as well as a host of others. And just to briefly mention some awards that we've won since our operation. Again, Best Startup Silicon Valley, 2015, that's when Intel came to me and asked me to build it. TechCrunch Disrupt 2017, Plug and Play, and we've recently joined Avanta Studios. So we've been around since 2014, and we're looking for partners who want to scale with us as an employee benefit. We're excited about the healthcare and Japanese market, and we're looking for $1 million. Thank you for allowing me to share today. If you've got that smartphone, please whip it out, and each of you have an opportunity to get directly to my site. But I thank you for the opportunity to share my company, Oniva, and I look forward to learning more with you today. So I'm going to go ahead and stop sharing in this moment and say thank you for allowing me to present today my company, Oniva, and I hope that it was of benefit for the audience. Thank you.
Thanks, Anita, and special thanks to all of those founders for sharing their exciting startups with us today. And I'm sure we all look forward and expect to hear from all of your companies for years to come. Now we're going to head into our first panel, which is titled Overcoming Obstacles. First, we have Demetrius Gray. He is the CEO of WeatherCheck, a Y Combinator company and winner of the 2020 Insurtech New York Startup Competition. Demetrius also has a successful background as a construction accountant. Next, we have Jay McKinney, founder of Infinico, a 3D simulation and decision intelligence company. Jay has over 20 years experience in insurance technology, including roles at Sampo, EIS, Majesco, and AIG. Our third panelist today is Nabin Yangulube. I think I'm just going to go with Junior, if that works with you. Junior is the co-founder of Pineapple and full-stack web and mobile developer who has a strong background in accounting as well. So at least we know the two of us here today got their taxes in on time. Our final panelist is Anita Gardine. She is the CEO of Oniva, where she operates the patented Oniva Concierge Care Platform that connects employees to FBI background check in-home caregivers who offer care to children and the elderly. And today we're fortunate to have Denise Campbell moderating our first panel. Denise is the president of the NAAIA New York Tri-State Chapter and client director at AIG, connecting clients, brokers, and service offerings. Please take it away, Denise.
Hi, thank you. Can you guys hear me? Perfect. So first of all, I am incredibly impressed with all 4 presentations. I have chills watching you guys present. It's just the beginning, right? Like you're 4 of a lot of different geniuses out there. And I will go ahead and definitely call you guys geniuses. It's been amazing to listen to you talk. I'm just so excited to be here. Let's just jump right into it. So I'm gonna start off with Jay. So, you know, having worked across a different bunch of different insurance carriers, talked about Sampo, I heard AIG mentioned in there, and tech solution providers, what inspired you to specifically create this emergency preparedness solution?
What inspired me was threat to my life, a lot of our lives during the Hurricane Sandy moment. You know, I was living in a place in Jersey that was 2 miles away from a prison, and I was thinking to myself, all of the power is out, and I wonder if their generators are working. And so, aside from that, people were getting held up for something so simple as a gas can. So at that point, I became a prepper, and it not only became about just prepping for life, but just prepping in general. Spending so much time in the insurance industry, you tend to be a little risk averse, and so it's natural. And then I started to think about all the times, you know, I fumbled and hurt myself and had to end up in emergency rooms, from car accidents to bike accidents, skateboard accidents. And I wanted to be a doctor at one time, so I started thinking, you know what, maybe there's a way we can create something that will help to protect life from natural catastrophes as well as things you do to yourself, and we can use technology. And so over the years, it just kept building and building, and then somehow we tied it to insurance when I met my partner, Ramki Durasetti, and we saw that there was a need for virtual training from A to Z. And so that's really what got us started. And being insurance people, we wanted to stick with our roots and start there and see what we can stem. And now we've been able to reach out to other industries as well. So that's how we really got going there.
Yeah, it makes a lot of sense. In my role, tabletop exercises are very important to make sure that clients are ready to go. So, I mean, it's definitely something that we needed. And while potentially obvious to some, not to others, but when you feel that need, you really feel how much this is really necessary. So thank you for that. Anita, we spoke. Admittedly, you're very new to insurance, right? This is very new for you. Spent much of your career outside of it. So talk a little bit about your experience outside of insurance and now trying to transition it into insurance. Is there anything remarkable there?
Absolutely. And again, thank you, Denise. Thank you, team, for allowing me to talk about issues of race today, because I generally don't. But my experience has been in technology. I'm sitting here in Silicon Valley in my home where I've lived my entire soon 58 years. So I've only known this world, and that's where my career has been. So if any of you are connected into what's happening in Silicon Valley, whether it's in tech companies or in the VC realm, you have a sense of what it's been like for me to work in technology. I am blessed that literally at 17, I was in AT&T's engineering department. And when I finished college, I went into AT&T's executive training program, got to work with Bell Labs and do great large scale systems. But, you know, that I am Black absolutely has been a factor, has been an issue, and it has impacted my career. Whether I was in corporate and I rose to senior levels in my career when I chose to exit, as well as now as an entrepreneur. So I share that to say I've gotten to see the world from a corporate executive perspective, as well as from an entrepreneurial perspective, inside of tech and now inside of insurance. What I can say is absolutely race has been a factor in defining and impacting my life throughout. I am so proud of you younger generation and seeing all of you take your power and create this meaningful change that we're looking for in this moment. And I emphasize meaningful change because it's more than the statement that got issued by a company. That's taking some action and recognizing the systematic oppression that exists. So what I've seen in insurance is like every other part of the world, and I'll candor. So I'm not sure that I would expect to see a different result in terms of how I feel I'm treated as a Black person, in particular as a Black female. I think some of the data that we showed saw absolutely Blacks are involved in insurance, but not in the same types of ways. You know, the reason I bring that up, I think about my experience out fundraising. Again, I'm 58. I'm a Black female, so I can't tell you if folks are reacting to age, gender, or color, because I can't separate them. What I can say to you is when I went out with this idea to say, hey, there are lots of executives like me who require some support if you want to keep us in the workforce. And the response I got from folks in the health tech space is, you're old. because you were old when you had children. That's why you think other people want to have this technology so that they can have support, so that they can work at home or work differently. Now we're living in a COVID environment where we're all going, gee, we need this as a solution. But the response that I got was, you're old, you're Black, you're female, and it was disappointing. So I admitted at the start that it's Reverend Jesse Jackson who made our introduction to executives at Microsoft. And he did that because he wanted to prove a point. And that is that exceptionalism comes from everywhere. And we've gotten to see that from South Africa to Jersey Shores to, here in Silicon Valley. So, thank you, Reverend Jackson, for proving that point, that exceptionalism comes from everywhere. And when given the opportunity, we can perform as good or better, typically better than we see in mainstream groups. And we've all seen the data. Diverse teams get better outcomes. So, is my experience in insurance different than what I've seen in tech? No, it's not. Right? Is there an opportunity to put some change in place that we can move it forward? Absolutely. And I would remind you further, my experience, as I get to know the insurance industry more, there are some folks who were born into insurance, literally. I've met some of those folks, Denise, that we've talked about, who knew their entire lives they were going to work in the insurance industry. And that's an example. Again, Reverend Jackson introduced us to Microsoft because there are advantages to network that some of us are simply locked out of. So what an amazing opportunity we have as an industry right now to create access and connect points for not just founders who look like me, but going back to the statistics that we saw Tony share at the start, to see Blacks in different roles in those insurance companies. So we really got to start to match the advertising, right? We all love the advertising. We see insurance companies, they got some of the best ads out there in the market. We just need to see their policies, who gets written, where they get written, how much do we pay, start to match that. So absolutely, I've seen race impact my career in tech. I'm seeing it in insurance, but I am very hopeful that we're going to take this moment, we're going to seize it, and under the leadership of our youth, we're going to make some systematic change. Did I answer?
If these guys are in charge of it, I'm not worried at all. We're ready to go. We're ready to go. So I want to, Nabin, is that how you pronounce your name?
Close. Nabin.
Nabin. Okay. And Junior. Okay. So first of all, thank you for joining this. I mean, it just speaks to Tony and David just really going out there and finding the talent we need to have these conversations. So thank you so much for joining us all the way from the continent, sorry. And I want to know, how is the environment for entrepreneurs in South Africa?
I think the environment for entrepreneurship in South Africa is relatively young compared to the environment in the States. One thing that definitely affects us here in South Africa, and I know this isn't a problem that's unique to South Africa, you'll find that it's a problem that happens across the continent, is the lack of availability for funding. I think the pool of VC guys available in South Africa and the continent is relatively small compared to Europe and the States. And this pretty much affects the type of startups that VCs are willing to invest in. You find that VCs are more willing to go for the safer bets, as opposed to the more niche type of startups. So, with that being said, it kind of means that as you starting your entrepreneurial journey, you tend to sway towards the tried and tested because of the fear of not being able to find funding. So we find that a lot of startups in South Africa tend to recreate the wheel. There aren't that many startups that are completely innovative because of the fear of not being able to find funding. But on the other side of the scale, what we do have in South Africa is a population that is extremely, extremely open to trying different ways of, transacting either with money, sending money, and, all those other, types of products. So, at the end of the day, you tend to have sort of a clashing of, the two sides of the coin. You have a potential customer base that is open to trying new things, but on the entrepreneurial side of things, you have to play it safe in order to fit that mold that makes sense to the limited, funding base that's available in South Africa. But it's getting better as time goes along. But I think that it is still a long way to go in terms of access to funding on the continent.
Yeah, I mean, that's interesting in talking about things that are tried and true, but innovation is really born of things that we need to go forward and move forward to, so things that are a little bit more risky. And honestly, the product that you guys are delivering is kind of a no-brainer, right? And it's something that's like, yeah, I would like to take a picture of myself and insure it and have a marketplace that mimics the way that I currently purchase everything else in my life, right? Why shouldn't my insurance look the same way? So I'm going to move it over to Mr. Gray, who I've had the pleasure of meeting several times this year through different avenues, awards that he's been winning. So I want to talk to you a little bit about what made you decide to move into this field and switch over to insurance and construction, and how that looked for you.
Well, you know, the news on the street is that I was a storm contractor, and so in P&C insurance, that's evidently a bad word. So I was taking money from insurance companies for almost 10 years, and I just really saw a transition that was happening in terms of new tech implements that were happening throughout the construction industry, and really just thought that process could be applied more to the product, and really started asking some questions as to why sort of economies of scale and market efficiencies weren't being applied to insurance policyholders. Basically, I knew that, like, if with a little bit of effort, insurance companies could actually beat me as the storm contractor, but they weren't necessarily taking that extra step. We soon found out that it was because they really didn't have an engine built for catastrophic weather events. And so that sort of opened a door for us to build it, given that I had spent so much time filing claims against them. And I always smile because, in effect, that's what we've had to go back to, because to the sort of question around bias, the industry is biased in some ways to its own degree of knowledge. Right. So we've done it this way for a really long time. We know it. We're sort of anti-risk. And so any sort of new insight sometimes takes a really long time to get traction until it's fully de-risked. And so, so in turn, we just found that it was easier to sort of sustain the business on the back of what insurers already know, which is paying claims, unfortunately. Yeah.
Well, I think it's interesting that you basically saw that you could be put out of business, so you put yourself out of business first and created a solution. That's a smart way to think about how to keep yourself relevant and to continue looking forward and to find those gaps. That makes a lot of sense. Jay, I'm going to come back to you for a second. I want to talk about let's talk a little bit about the obstacles and inequities that founders may face. So can you tell us about, do you think it's more difficult to sell insurance as a Black founder, or your product as a Black founder? And can you tell a story of a situation you may have faced?
Yeah, so this is an interesting question for us, because there's a couple of reasons why I'll tell you we haven't faced, why I believe we haven't faced this issue yet. One, like I mentioned in the earlier part of the call when I did my presentation, we're the youngest company here. We really started getting traction about a year ago. And so maybe we just haven't been around long enough to encounter more fences and ceilings. The other reason, which is what I really hope is the true reason, is that our product, our offering is just so different. And the cyber insurance community embraced it so tightly. And I would like to think that because of what we're doing and the problems that we're trying to address, there was just no time for it, because there's bleeding and hemorrhaging in that community. All of the policyholders, day in, day out, we hear about it every day. So as far as being a Black founder, I think we still have a ways to go, and I'm hoping that we won't run into those fences. You know, I can tell you that we are in our first month of our raise, trying to raise our seed, and, you know, other letters in the alphabet after that. So we still have a ways to go, but that's from the founding perspective. So let's push that to the side for a second. What I will say, you know, I did say I spent 20 plus years in this industry. Now, as an individual contributor and a manager working in different insurance companies and software firms that service insurance companies. I definitely experienced that, for sure. Those stats that you showed earlier, Tony, with the varying degrees of underwriting, I think we showed about 6% of African Americans. And that holds true in my mind. I've seen that a lot. I've trained one or two bosses too many in my career. So on the worker side, I definitely saw it, definitely felt it. There's a lot of change that we can do there. But I think it's just a little too early for us. And if we did feel it, we didn't know, because we're just so busy trying to solve these issues. Our message is not to lead about, this is how we're going to make you profitable. This is our business model. We actually lead with, this is how we're going to keep you safe, make you better, make you more powerful. And we stayed with a myopic view that I don't think we've seen it. But again, we're young. So, that's the best way that I can answer this question. I think time will tell.
Yeah. Okay. Well, hopefully after more conferences like this, it will not be a problem.
Yes.
So this is both for Anita and Demetrius. So you both are in this market from outside of it, right? Jay was inside of insurance before he started. You guys are both kind of out of it. I mean, Demetrius, you were handling claims and talking about things from that way, but the stats that we talk about earlier, and even the stats we see on VC funding for Black founders are pretty bad. So can you share some of the challenges you may have faced with fundraising? Now I'll leave it, Anita, if you want to start.
I'm happy to go first. Again, we were founded by Wilson Sonsini in January 2014. So we are an older company. So we have had an opportunity, to experience more of that. I shared a little earlier about an experience I had with one VC firm that just outright said I was old, right? The reason that as a founder, I focus on bringing FBI background check care into the home for professionals, it's viewed as a female solution. And it's viewed as a not Black solution. So as I say that because as a Black founder, if I had a solution that focused on Black people, I focused on hair, or I focused on lipstick, something that was unique to Black. We're starting to see, since 2014 in Silicon Valley, we're starting to see an emergence of Black VCs and Black investors. Reverend Jackson had those same folks in the room with us in 2013, 2014, when he talked about making this change. So absolutely, we're seeing some movement on Black media, but candidly for me, because my solution is female focused and it's not a Black product, that leaves me a little bit outside of the box of where to go for funding. So the 2.6 million I've raised has been through friends and family. The notion of what's a seed round or Series A really is kind of meaningless. It's I need to raise funds to operate my business, and let's do that. I wish I could share a different outcome in terms of my challenges, but we've all seen the statistics as you've shared. 2% goes to Blacks at best, and as a Black female, a much smaller percentage would be eligible for me or applied to somebody like me. So would absolutely like to see that change, but vying for funding, I think it was shared earlier by Jay, the language that the team at Microsoft will use in talking about us is folks are looking for no risk. They want 100% completely de-risk product before they will make an investment. And as a 6-year-old business owner, and again, as a former CFO in my life, it forced me as a CEO to build a business where once you launch, you may not need to get to those series numbers with lots of B's and C's and D's, because you focus on cash flow and you have to focus on self-sustainability because you don't have that safety net that other founders may have. And by safety net, I mean access to capital markets.
Right.
That's something that we're working on. And just I'll mention briefly, one of the things I am excited to see is that Microsoft not only introduced a VC fund targeted to Black professionals, but they've also identified $50 million in debt funding for firms ready to scale, which is really great for a company like mine that may not need to dip into equity markets a whole lot. To experience the type of growth that we hope to have. So again, it's an opportunity where we're seeing corporate America step in the case of Microsoft, because in our experience, they're getting to see me up close and personal. I was on the phone with them last night talking about what I'm going to say today.
Right. And so that's that's an important part of this, is talking about the corporate responsibility behind this and the ways that corporations get involved. Demetrius, you have, when we spoke about setting this up, at this call up, you had a very interesting way of looking at the world, which I appreciated, which is pretty much not positive, but a moving forward way, right? So one of the things you spoke about is that there were a lot of unknowns, a lot of things that you weren't sure about, so you wanted to focus on what you did know and what the actual problem is. So talk about the unique way you thought about kind of getting funding and even your first accelerator and what that looked like for you.
Yeah, so our first customer in the insurance space came by way of Erie Insurance. We were specifically looking to target an accelerator in the country that was specifically focused on a rural community where we could get to a PNC executive team. It's the gap that we had. We didn't know anybody in PNC. I very quickly learned that Humana actuaries are not the same as a PNC property actuary. And so, we sort of implemented a strategy that said, let's get what we need. I think in some ways, sometimes people are taken off guard by that notion that like there's a Black company that is specifically focused on getting what it needs to succeed. So we're not necessarily looking for sort of the Black contract. We're looking for the product to be implemented in the way that we built it, as it best fits within the org. And so, we've seen varying degrees of traction within companies who sort of have a clear channel for Black suppliers and those that don't. And I sort of remarked earlier in our conversation that, the whole sort of Black Lives Matter movement for us acts really as a data point for us to really sort of look at who has a commitment. So I have to commend John Neal at Lloyd's of London. As soon as they made their sort of public apology, it was then easy to say, okay, so if you're making a public apology, then it must mean that you're interested in sort of helping Black suppliers get a foothold within your company. And so he was incredibly responsive and intentional about following up and sort of clearing the path in a way that I think some organizations could certainly learn from, in terms of like, how do we clear the road for Black suppliers to sort of get through this path of, in a lot of cases, is a 100-year-old industry that has largely excluded people of color. And so, for us, it has been accelerators. That's how we have sort of charted that path. We get, like people like, oh, you do it for the investment. No, we don't do it for the investment. We do it for the customers. And so that's been our approach. It seems to have worked thus far. And we're going to keep doing it until we can't anymore.
And yeah, I mean, it makes sense, right? Because one of the things that, that we think about and we talked through when we were on that call is you had to see obstacles and find your way around it, right? To figure out how you were going to make this work, to be able to deliver your product, which is ultimately what you were looking to do. But what this point of this conversation, the conversation after this, and the conversation we'll continue to have is those obstacles should no longer exist. I think one of the interesting you said during our conversation is that when you weren't getting the responses you needed, when you were struggling to raise X amount of dollars with a very clear proof of concept and a very clear product, and some of your counterparts that did not look like you, that were white, were getting $20 million off an idea, it would seem like a really difficult thing. And so you specifically charted a course to make that work for you, to find the people to invest in you. But we shouldn't have to do that, is the point of this. So it's good to know that you are able to do that, but we shouldn't have to anymore. And so, and again, Anita, you mentioned it, Demetrius mentioned this during our call, to summarize this very quickly. Maybe it's because you're a woman, maybe because you're older, maybe because you're Black. Demetrius, maybe the person doesn't like beards, maybe they don't like young people, maybe it's because you're Black. There's a whole lot of unknowns, but the fact that you ever have to go through this is what you don't, when you want to waste your genius mind thinking about that. You just want to deliver your product and do what you have to do. So I think it's interesting. You talked a little bit about the difference between, it's easy for you to get to innovation people, but not necessarily the product leadership, right? So is that an equal nod across the team? Jay, are you finding it easier to reach product leadership? Junior, well, you're selling a specific consumer product, but are you looking to get more in line with other business leaders for distribution? How does that look for you?
Yeah, definitely. We're very much so open to getting in touch with partners for distribution purposes. For us, our entire business model is based on not having to rely on our own insurance license. So we partner up with carriers who have their own insurance licenses, and on a product by product basis, we basically become what you might call the technological arm for distribution for them. So in that regard, we tend to sort of, for each product that we want to roll out, be it pet insurance, motor insurance, or risk insurance, we tend to find a specific carrier who's demonstrated that they're really effective at that. And we approach them for partnership and roll out those products in that regard. So that's a strategy that we follow, and it's been really successful for us up until this point.
Awesome. We're gonna have to wrap up because we're a little behind, but I want to ask one more question, and I'll ask you to answer very, very briefly. Again, Demetrius, just because we had such a long conversation last week, one of the things you talked about is as insurance companies are making all these statements in support of Black Lives Matter or diversity in general, one of the things you talked about, again, in your access, the barriers to access, if someone emails you with the name Demetrius, potentially that is not your normal business partner, you should take that email, right? You should take that call if you're really serious about promoting diversity and Black or supplier diversity in general. So each of you, can you tell us what you think insurers can do to actively promote Black leaders and specifically Black Insurtech founders?
Well, take the call, and don't just take the call, continue the conversation. The important moment, and I know everybody on this who's watching is looking at everything that's happening in our world and saying, how do I help solve this problem? And the real answer is that there are Black founders like all of us who are out here building companies, and we need an open door. And so when we email, the fact of the matter is that we've already done more than every other founder. We're already in this sort of 1 percentile. We've been better. I come from rural Kentucky, right? So if I'm getting to you, baby, like offer a seat, please, because I've traveled a long way. And so there's just an element of like sort of opening that door, continuing the conversation, and really actually taking an opportunity to teach, because sometimes I don't know everything, right? I don't know everything about your company. And so really the best relationships that we've had have been ones where maybe there isn't a contract, but maybe there's some knowledge that you've gotten says, here's why this doesn't work for us, or here's why it does, and here's where you should really think about going, and can I make that introduction and really sort of get to scale from there.
Right. Anyone else? Quick advice for insurance companies?
Yeah, I was going to chime in quickly. So one thing that insurance companies have become really good at is actually addressing the big white elephants in the room. So if something happens that is overtly racist, I think corporations have become really good at rooting that out and dealing with that. But I think where they're lagging is actually dealing with the more subtle stuff. And I think in order to start challenging and bettering those situations, it's about actually asking people about the actual lived experiences when those things happen. I tend to find that in the corporate world, a lot of things get said that might leave you feeling sort of deflated, but to the common eye or the unsuspecting eye, those things might be seen as common things to say. So for instance, if somebody says, oh wow, you speak eloquently, something like that might affect you, at the end of the day. So it's all about actually giving people a platform to speak about the actual lived experiences and how the subtleties in the workspace can actually affect you, as opposed to just focusing only on the overt stuff.
Exactly, the microaggressions, the unconscious bias, those conversations are important. Anita, quickly.
Awesome. I would just add the template. I mean, one of the things in insurance, we all look at what's that template, what's that model case that we want to insure around. That's the same thing that happens when VCs look at look at investment opportunities. We don't have a hoodie, right? If we all want to go back to what does that typical template look like for a founder? I don't match that template any more than Jay, Demetrius, or Junior does. So part of what all of us need to do is to shatter some of those templates that we hold about what does a successful entrepreneur look like? Because I don't look like Mark Zuckerberg or Jeff Bezos. And I know Jeff started out with just books and building Amazon, and we chose to start with a full set. That doesn't mean that we're not as capable and our outcome, I'm not going to say I'm the next Amazon, but it doesn't say our vision's not as big.
Don't limit yourself. Don't limit yourself.
But you get my point, right? I don't look like that. And you can imagine when folks see you come in with an idea and you don't look like that template. And again, we're all trained to focus on what is a good model X, an insurer candidate, what's a good model underwriter. Right now, what young people are saying to us is we've got to release some of those tools because they aren't helping us. They are causing the systematic oppression that folks like me weren't even aware of.
Right.
The reason I talk about my age is because I've not done my best for your generation, because you have to come out and live with stuff. I've learned how to build networks like Caucasian men and work with my Harvard and Stanford alums to get to those insurance execs I need. That's one model. I love the model right now is let's crash and burn and focus on how do we build those direct connections and create access so that folks like Jay and Demetrius and Junior can get to those decision makers and build those products with as much ease as folks who do look like Jeff Bezos and do. So that would be it for me. Let's think about those templates. What's a successful entrepreneur look like? And then let's throw them away and focus on the product, the market opportunity, and the skills and abilities that these folks bring. When you hear Demetrius talk about how he was just raking it up, you go, my gosh, I want to invest in this company. Same for Junior and Pineapple and Jay. So it's awesome to see what's there.
Yeah, I'm excited about all these products. Jay, quickly, last remarks on this?
Sure, I just want to augment on everything. It's not that hard. For example, if you've never worked with Black founders or founders trying to raise money, just follow us a little bit. Like something, comment, engage us, and then we're going to get into a nice discussion. And you do that enough, at the end of the day, you're going to realize that there is no color and we're all just hardworking business people. But I get it that there's a crust that we have to penetrate through. But it really just starts by just not being silent, addressing the white elephants in the room, and having forums just like this. Let's just keep it going. And if you have an opportunity to start a company, now I want to say something to all of us people of color who start companies. Let's make diversity a design thing as well. You have an opportunity to take advantage of all of the spectrum of the rainbow. So let's do that as well. For those of you who are leaders in the insurance community and you don't look like us, you can also not only reach out to us little by little, but look at your team and try to figure out how you can start diversifying. You have that power. You just don't realize it sometimes, but this is a wonderful, great start. And so that's how I like to close it out. But thank you guys.
Thank you guys very much. One last thing I'm going to say, because I think this is very important. As your insurance companies that you're meeting with, Black Insurtech founders, keep in mind that everyone is just like you would meet with other white Insurtech founders. There's going to be good ones and there's going to be not so good ones, because we're all just human. So if you have a bad experience, don't assume that, well, I tried, because that's just not a realistic thing. If you didn't hire any more white men after a white man failed, that would not make any sense, right? So keep that same energy when we're talking about our Insurtech founders and what we're trying to do, and make sure that you're giving them a chance based off of the content, of the character, of the product they're delivering, and not the color of the skin of the person who's delivering it. So thank you very much for this opportunity. I'll give it back to you, Tony and David, to move on to the next panel.
Oh, thank you, Denise. This is Brett. I'm taking it from here, but thank you. You guys are absolutely amazing. And thanks to all the founders for sharing their personal experiences. And I'm sure we're all agree that they're definitely going to help improve the entrepreneurial journey and continue to inspire more Black founders in every industry, not just the insurance industry. So kudos and great job, everyone. I appreciate you guys participating today. Now we're going to now move to our second and final panel of the event, titled Removing Race from Underwriting. Our first panelist is a good friend of Insurtech New York, Bill Goddard. Bill is a retired attorney and long-term angel investor. Bill vets Insurtechs for New York Angels and holds investments at Insurtechs all around the country. Next, we have Meeti To. She is the Executive Deputy Superintendent of the Insurance Division at the New York State Insurance Department of Financial Services, which regulates over 1,400 insurance companies with 4.7 trillion in assets. Prior to DFS, she was a partner at Debbie Voice and Plimpton, where she worked in the restructuring group and global insurance practice. Our third panelist today is Brian Casey. Brian is a co-leader of Lock Lord's Regulatory and Transactional Insurance Practice Group. Brian works with carriers and insurtechs on corporate law, structured finance, and regulatory matters in insurance. Finally, we have Randall Bennett. He is the head of insurance at Seago, who is also an Insurtech New York competition winner. He previously held roles at First Chicago Insurance, National General, and Allstate. And our final moderator for the event today is Zaida Mari. She is the co-founder and CEO of an exciting startup, LifeVest. She is a 20-year insurance executive, innovator, and strategist who served as global CMO of AIG and MetLife's head marketing officer. She has led global strategy, marketing, innovation, and product development for direct-to-consumer, agency, and affinity models. Thanks for everyone for being here today and participating. And Zaida, please take it away.
Well, thank you, Brad, and thanks for everyone joining on this very important topic, to talk about a very important topic. As you all know, the use of external data sources has the potential to benefit insurers and consumers by simplifying and expediting the life insurance sales and underwriting process. So glad to moderate the panel. And I think what we're going to do is start out with meeting. And for the benefit of the people that are on the call, not many of them may be familiar with the circular. So I'll ask you first to give us a little high-level overview of the circular that was issued last year, and specifically tell us how different is this from the current law that protects consumers against using race in the underwriting process.
Sure. Good morning, Zaida. I'm happy to kick us off, although it's a tough act to follow the great founders we just heard about. I'll try to make circular letter number 1 as exciting as possible. But first, I just wanted to say a moment to really applaud the organizers of this event and echo what's already been said by others this morning. It's extremely important to highlight the lack of diversity and the abundance of talent, diverse talent out there. It's even more important for the industry, including the Innovation Committee, to step up and do something about it. So we need actions, not words. So I'll leave it to that. So turning to circular letter number 1, the short answer to your question is that it does not create new law. The circular letter applies existing law to new underwriting practices. So as we know, New York law already prohibits discrimination against protected consumer classes across the board. It expressly prohibits discrimination based on race in insurance underwriting. What circular letter number 1 does is simply remind insurers that they have to comply with anti-discrimination laws, whether they underwrite directly or whether they use data, models, algorithms that may be provided by third parties. So when you boil it down, it really is just saying that insurers cannot do indirectly what they cannot do directly. The circular letter deals specifically with life insurance, although the principles that it stands for really apply across the board for insurance and all entities regulated by DFS. But it speaks to life insurance because it followed an investigation that was done into life insurance underwriting practices. And the result of that investigation was that there were significant consumer protection concerns raised by what we found as an agency. So specifically, we found that in some insurers were using information that was not directly related to an applicant's health in making underwriting decisions, like where you live, whether you own a home, et cetera, et cetera. The concern, of course, is that these proxy forms of data might be used by some insurers to not underwrite certain consumers or underwrite them at a higher premium based on race or some other protected characteristic. So that was one main concern that was raised by the investigation, but there were other concerns. There were concerns about the accuracy and reliability of the external data that was being used. There were questions about, in some case, the basis of certain models that were intending to predict health outcomes based on things that were not, again, directly related to an applicant's health. And compounding all of that was a lack of transparency that might be linked to just the complexity of some of these models that made it hard for certainly regulators, but for sure consumers to understand the basis of underwriting decisions. So going back to circular letter number 1, it highlighted these concerns for the agencies, for the industry that DFS had found, and told insurers, reminded insurers that they should not be using external data, algorithms or models unless the insurer is able to demonstrate that those data models, et cetera, are not based on protected class status, including race, that they don't unfairly discriminate, and generally comply with laws.
Okay, thank you, VT, for such an amazing intro to the circular. I'm going to switch to Brian and ask you, how are your clients looking for guidance in handling the circular around the use of external external data and algorithms, and specifically, what are some of their concerns?
Yeah, thank you, and thanks to everybody for asking me to participate in this important event. Well, let me just first say that I think almost all stakeholders agree that disparate impact discrimination is something we want to avoid. And my view is that the circular is leading down that path, essentially. So for those non-legal buffs on the call, so you have intentional discrimination, which is obviously prohibited. Then you have the disparate impact theory, which basically means that you didn't have intent to discriminate, but the practical effect of what you did by statistics generally shows that it's having a disparate impact on a protected class. The Supreme Court has said so. The federal HUD agency has actually codified that theory through regulation. In terms of concerns and questions we're getting from clients, the first one is, what exactly is, quote, external data? I think, not to be too pedantic, but most data is external in nature. If I get data from a prospective insured applicant through an application, it's obviously coming externally, but it's very reliable unless they're committing fraud, of course. So there's some questions about where's the line on what is external data. So the circular does say that data that's directly related to the medical condition is not external data. It cites essentially Fair Credit Reporting Act companies like MIB, trusted third parties, and the government's in there, DMV reports and criminal records. Whether the data from the trusted party is accurate or not, that's a different question, not always, of course. Other third parties, for example, that I think I'd throw in the trusted bucket because they're regulated would be banks or other financial institutions, for example. If the theory is that a regulated body providing the data is a reliable source of that data. Internally developed data, that's a concern that the life insurance companies have. Now, that's kind of a double-edged sword because ultimately, quote, internal data probably has some origins from being external data a long time ago. But if I have a book of business of customers and insureds and I want to slice and dice those customers' information, I would consider that to be internal data. So the real question there is, reliability and integrity of these third-party sources, transparency in terms of what the model does and doesn't do, and transparency in terms of advising individuals that are declined or lower rated for insurance purposes. And we have concepts of adverse underwriting notices already, but they may need to be retooled a little bit. And I think the underlying current here, which is a much broader one, is the evolving area of consumer digital data control and ownership that feeds into this issue ultimately. The second and final area I'll comment on in terms of questions is the proverbial proven negative, which lawyers hate, of course. So if I've got to go prove that my data source isn't having a disparate impact effect on what I'm using that data for. That's a big endeavor, and I'm not sure that the insurance companies, at least my clients, are capable and qualified to do that yet. Now, that said, I always look around for other regulatory pronouncements that are a little to the left or to the right of insurance, financial services, and the Federal Home Financing Authority has recently codified through regulation approvals of credit scoring models. If you want to use that to have a loan that's ultimately backed by Freddie Mac or Fannie Mae. So we may see some more regulatory developments towards more specificity in terms of how models are approved by the regulators.
Right. Thank you very much, Brian. Obviously, a lot to digest just with that alone. I'm going to switch it up a little bit and go to Bill, given your work and with startups. How are you seeing already the circular impacting data analytics startups that sell into life insurers?
Well, thank you. And thanks so much to Insurtech New York for having me here to be part of this really vital and important discussion. I'm also pretty pleased to be on a panel with Randall because I am a huge fan of Sigo Seguros, his company. But, I believe that Circular One has become an important diligence tool for me and for other Insurtech investors, since that's what all I do. The Circular is directed to life insurance, but holds lessons for P&C as well. Too many startups begin with the premise that powerful enough algorithms can produce perfect underwriting for each individual, lowering pricing and costs. However, insurance is a risk spreading and risk distribution tool that's set up, designed to defray the cost of misfortune. If those experiencing misfortune had not been able to get insurance, regulators will inevitably intervene. The policyholder bar attorneys are already clamoring about black boxes. So it's really not about powerful algorithms anymore. It's about the use of algorithms in a transparent way within boundaries. As investors, it is our self-interested financial duty to capitalize trustable, verifiable models that are not going to get cast as black boxes. It's not in the investor's interest to face class action plaintiffs or to strand regulators and legislators with no alternative but to play the prophylactic Brutus, to think artificial intelligence and machine learning as a serpent's egg which hatched would, as its kind, grow mischievous and kill it in the shell.
Okay, thank you, Bill. It is often helpful to look to the other lines of business in the industry, specifically personal lines, where some of these topics have surfaced and they have a unique way of, addressing it. And so I'm going to ask Randall to share his perspective on how personal lines and specifically auto has addressed this issue of race in underwriting.
Thank you, Zaida. Thank you, Bill, for the kind words as well. So I guess I want to say that in personal lines, they've been shrouded with the same challenges, and they haven't really been that successful when it comes to addressing these. So in 2015, PCIA responded to a discrimination study by saying that insurance rates are colorblind and solely based on risk. This idea of colorblindness means that everyone is treated equally. There are no special considerations made, and so the idea is that it will result in equal opportunity. Unfortunately, that's just not wrong. As we've been talking about and as it's been said, it creates this disparate impact because the underlying systems are not equitable. And I think that's where it really needs to be addressed, is these underlying systems. So even that when race is not included or other protected classes are not included explicitly, there are some important factors that are used which reflect decades of discriminatory practices. So that's the same challenges that auto and P&C carriers at large are also facing.
Okay, thank you, Randall. Meeti, what services are available through DFS to help the Insurtech startups understand these new regulations or circulars, for that matter, to helping them to build the right platform and to support the law?
Yes, well, as I hope many of you already know, DFS recently launched a new program called Fast Forward. It's meant to provide an open door for entrepreneurs in a more informal way to engage with us on innovative financial product services. So you can submit an inquiry to the program through the DFS portal online. And then what we do is, analyze the information, and then we'll match the entrepreneur with the right subject matter experts at DFS, within the insurance industry. So one question I had been asked was whether DFS Fast Forward is just a parallel track to the normal process, before DFS Fast Forward. And it's just another way of accessing really the resources of DFS. But we want to make it easy for new entrants to this field, which can be daunting with all the regulations. So we'll match you with the right people at DFS. We'll schedule a meeting where we can discuss your business ideas and answer any regulatory questions. So that's what it is. It's open to innovators in all areas of financial services, but it was actually built on a pilot we started earlier this year, specifically in the Insurtech space. And based on our experience, with the pilot and the meetings we've had, the meetings have been, I think, very helpful for, for innovators who, were able to ask these questions directly, get some guidance. But they were also very useful for us because we have an opportunity, first of all, to hear great ideas. That's very exciting, but also see what areas in our regulations might need to evolve in light of new technology. So that's been great. And I would say the program reflects the agency's long-standing belief that innovation, responsible innovation, is good for consumers, it's good for New York. That's particularly true now. So we're really calling on innovators for ideas about ways of using technology to help people in really a difficult period, especially in areas touching public health, financial inclusion, financial resiliency. So our program, Fast Forward, allows us to accelerate the regulatory process for innovative ideas that will help the state and New Yorkers rebound from the impact of COVID and the recession. So please keep the ideas coming.
Excellent, excellent. It's so nice to hear that there's such a program exists, certainly not just for the insurtechs, the emerging ones entering the market, but also just, for the incumbents, because it gives us a window into, having a dialogue with the regulator about, innovation and making sure that the regulatory orientation is built into the mix before they launch or as they launch, or enable them to pivot so that no one goes afoul of the law. So to date, in terms of life insurance, one of the biggest things that we've seen continuing to emerge and increase is this focus on accelerated underwriting. And obviously that is where this topic of external data sources emerges in, because as carriers move fast to increase the level of accelerated underwriting through a fluidless model, that's where the dependency on this external data and external sources enter into the picture. So I'm going to ask you, Bill, do you believe insurers will have to change their data models and distribution models to accommodate possible regulatory changes around the circular?
I guess the short answer is they should be doing that. Look, I'm extremely excited about Insurtech in the life and annuity sectors. We've been aware of this problem for a real long time and how life insurance distribution is sometimes painful. 40 years ago, Woody Allen said in one of his movies, "There are worse things in life than death. If you've ever spent an evening with an insurance salesman, you know what I mean." And then in another movie, when Woody Allen is sentenced to a chain gang and then punished by being stuck in a steam box with a life insurance salesman, carefully explaining the trade-off between whole life and term as they descend down into the sweatbox. The individual life insurance underwriting process is traditionally focused around medical exams that are slow and tedious. The life industry loses way too many potential sales because of the lag between quote and bind. And to make things worse, life insurance distribution is literally dying as the agent force ages. It's up to new distribution to close the gap between quote and sale and do it fairly. Some by improving the efficiency of processing medical histories, but of course with protection for HIPAA protected data. Some by streamlining the testing itself, making it less of an unattractive process, and some by replacing the testing altogether through analogous algorithms. But the private sector has to provide regulators with the tools to show that the algorithms are fair. And that's going to be a challenge that I think the industry are up to, but it will be a new challenge. And make those models transparent, or there's the danger there won't be any. So, as I love to say, open the pod bay doors, Hal. Let's get going.
Woody Allen, huh? Randall, let's go back to personal lines and auto again and touch on this disparate impact and what it means on the auto side. And also tied to that, help us to understand what new and innovative ways you've found to collect data that is compliant against these anti-discrimination laws.
Yeah, absolutely. So Brian mentioned one of the ones that's really big. The two biggest ones that I think of when it comes to this disparate impact is insurance scoring and driver history reports. So insurance scoring is based on the same creditworthy algorithms that's used in consumer lending, which was something Brian was talking about earlier. So in a study done last year in November by UC Berkeley, they found that in consumer lending discrimination, Black and Latinx paid more interest because of the discrimination in the algorithms. What they found was that this carried through for traditional as well as fintech companies. So this overall just means that the AI isn't exactly going to save us when it comes to these algorithms. When it comes to the driver history reports overwhelmingly rely on policing. And as we know from recent studies and studies that have been going out for a while, policing is done more aggressively in Black and brown neighborhoods than their white counterparts. So for SEGO, what we thought of and what we're looking to do is to create it so that socioeconomic factors do not undermine the actual driving risk. So when it comes to creditworthiness, we're just going to avoid that entirely. And when it comes to driver history reports, we're going to apply telematics more heavily than they do on the driver history report. So accidents will still be important, but violations found on the driver history report won't be as meaningful as their telematics score. But overall, I think what you're going to see is the same thing that Bill and Brian were getting to, is that it's, again, these underlying policing, it's underlying creditworthiness, it's underlying consumer lending that we all rely on as a country to be better at what they're doing. So that way consumer services like insurance can be more appropriate.
So definitely more themes right around fairness and certainly transparency in those processes. Miti, I'm going to switch it back to you. What concerns, if any, have you heard already from some carriers or Insurtechs about this circular?
Well, we've heard that the circular would have been more helpful if it had listed specifically what insurance companies had to do to ensure that their data and models comply with the law. And, the need or the desire for certainty is obviously understandable. I believe the industry is, really trying to do the right thing. I would respond to that, I think, as is evident from this short conversation on this very complicated topic, that this is, it's a complicated issue. It's complex, it's nuanced, and to add to that, it's evolving very fast with, thanks to this community coming up with new ways of doing things. So all that to say that this is not, an issue that lends itself very easily to, one size fits all kind of compliance rules. That's the first thing I would say. The second thing I would say, and this may, be a disappointment to some of you, but most regulators really don't have the in-house expertise and resources to properly evaluate complex AI processes, particularly when they're, a black box, to take the term that Bill used earlier. So as a practical matter, if we as an industry are committed to addressing racial bias in underwriting, as we all are, the solution has to come, not just from regulators. We really have to work together, all of us, insurers, vendors, the innovation community, of course, regulators, to come up with tools, best practices to make sure that the underwriting process doesn't produce disparate impact. And to this particular audience, I would say this is a huge opportunity for innovators. There's an urgent need for solutions here. We've heard that technology itself may have its own biases. So it's not to say that any technology solution will be useful here, but there is a big opportunity. I mean, one thing we've been considering, for example, is whether there's a way of automating in some way the disparate impact testing of models. I think of it as, by analogy to something like penetration testing of cyber compliance program. It's not a perfect analogy, but you see where I'm going. That's just one example. We're counting on this community to come up with many more. So we welcome a dialogue with all stakeholders, obviously consumer advocates, insurers, to tackle this issue. And we would love to hear from this group as well.
Okay, thank you. Again, a lot to think through, and there you have it. For the innovators out there, begin to think through that suggestion by Miti and certainly come up with an idea that, again, the marketplace is in need of such a solution, and to the degree that we can automate that would go a long way. Brian, as more algorithms and AI models demonstrate effectiveness in underwriting, how do you see attorneys and data scientists working together?
Sooner or later, shoulder to shoulder and elbow to elbow, probably a little bit later. And the reason I say that is that there's just a pretty big knowledge gap to be bridged between the compliance and the legal function and the techies, data scientists, I guess I should call them. That said, I've recently heard in the last 6 months from generally through my contacts who are in the general counsel's office that they've now been introduced to the new data scientist at the life insurance company, or more than one. So right now, I think the data scientists inside the life companies are, definitely working with actuarial, underwriting, and digital commerce teams, and are now getting a seat at the table with the compliance and legal function, which is good to hear. But I still think the lawyers have a lot to learn. We've had a long history of knowledge gap just on the basics of the anti-discrimination law and what constitutes a class of insured, what constitutes unfair discrimination. In my career, 30 years, unfair discrimination, essentially you kick the issue to the actuary as well. If the actuary can support it, then it's fair. You got to go a little bit deeper than that. So I do think there's a lot of learning to be done. As I have mentioned in the past, if I were going to law school now, I would get a minor in data science, and I think you'll see an evolution of lawyers that are, I don't know what they'll be called, but they'll be data scientist lawyers, more akin to a patent lawyer or an engineering lawyer, a construction lawyer that really knows the technical side of what's going on in the business side. And finally, I'll say that, working with other clients that have data scientists that aren't traditional clients for me, which are mainly, regulated entities, vendors of data are now facing the prospect that they themselves may become regulated in some respects. So I think there's a broad spectrum of issues to be addressed in terms of how lawyers work with data scientists in the future.
Okay. In the interest of time, we have one more question, and I'd like to ask all of you, but if you could just briefly address it. And obviously, we've talked a lot about this in the short time, and there's a lot more, I think, to discuss. But just based from your perspective, both from the regulator side to the legal community to the insurer to advisors, what, if you can all answer this question, which is, what do you see as the impact to the society, that in the broader context of this regulation, what do you see as how profoundly impact the impact that you see rather on the industry and life insurance in general? So let's start with Bill.
I think there are huge and very profitable investment opportunities, and this is a time of great change. These are underserved markets that we're talking about, and there's data that is available that doesn't correlate with risk that I think will slowly have to be squeezed out of the ecosystem. And I think the people who are rising up to the challenge as entrepreneurs to do that are really wonderful people. And I certainly would like to make a profit.
Meeti, your thoughts?
I don't have that much to add to what I already said. I would say, it is a challenge. It is complicated. It's not a reason for us not to tackle it. In fact, as I said, it's urgent for us to tackle it. And I'll repeat what I said. There's a huge opportunity for innovators, and DFS Fast Forward is there to receive your ideas.
Randall, your thoughts?
Yeah, thank you. So I think that it creates an unfair challenge on the industry. I think that something like this is asking for an industry that is mainly based off of regressive analysis to go back and correct things that are done on data inputs. So you have the idea of policing, you have the ideas of, did I get too many tickets? Did they get stopped for this and stopped for that? That's all on the data input side. And instead of allowing the insurance industry to I guess, review that as much as they can, you're asking them to change the facts that's actually underneath. So I think that it's a misplaced challenge that's being brought here when it comes to stuff like this.
Okay, last thoughts from Brian.
Well, following on Bill's comment, lots of new work for lawyers, so that's good. And following on Randall's comment, maybe a little bit of a different perspective. I generally agree with what you said, Randall, but the flip side, I think, is in the long run, I think this will be an empowerment for consumers to understand insurance better. I think insurance generally is kind of a black box product or service, whatever you want to call it, to begin with. And so I think some of what might come out of these regulations will ultimately result in better informed consumers.
Okay, well, this has been an interesting topic to moderate. Clearly, I mean, the thing that jumps out at me is profound transparency on all fronts, so that we all, as consumers and regulators and carriers and entrepreneurs, really have more transparency around life to sale and the underwriting of insurance. So at this point, I'd like to pivot back to you, David. Thank you for allowing me to moderate on this important topic.
Thank you.
Great. I want to thank our moderators, Zaida and Denise, and all of our speakers, Lindsey, Demetrius, Jay, Junior, Anita, Bill, Brian, Maiti, and Randall. You made for an excellent conversation, and I think everyone was engaged and hopefully, like me, was very impressed by the quality of the content. But I want to stress that the purpose of this webinar was not just educational, but it was to start a conversation that I think we can all be a part of that will lead to action. And you all have the power to take action, to make change. You all have the power to promote Black team members into your leadership. You have the power to work with different suppliers and increase your minority spend on suppliers. And you have the power to make investments in the right technologies that are for your company and Black-led insurtechs. So I think you should use that power wisely, and together we can change the industry. I also wanted to mention that this is part of Insurtech Northeast Week, so we do have additional programming and content that's available for you. Using the same webinar link, if you would like to rejoin at 1 p.m., we're going to be talking about the workers' comp and general liability risks of working from home. Thursday, tomorrow morning, Innovation Underwriters is going to be covering content around innovation. And then on Friday, Quesnays is going to be covering content on female founders' stories. So stay engaged this week. And our next event in August will be on August 27th on Core Systems. So we look forward to you joining us for future events. Thanks, everyone.
Thank you.